Hello, welcome to my YouTube channel. So today we are breaking down the three phases of the market. The market doesn't just move randomly. It has a certain algorithm that it follows. The market actually has a pattern that it follows. And today we are going to look at this pattern that the market actually prints. Getting to understand this pattern is going to be to your advantage. So stick with me to the end of this video whilst I explain the three phases of the market to you. First thing, the market moves impulsively. Second thing, the market does correction. Then thirdly, the market does continuation. So these are the three phases of the market structure. After any impulsive movement, the market retraces. That is where we see pullbacks, chart patterns, all the chart patterns we learned earlier. That is where all these chart patterns come into play. So in the retracement form, or in the retracement phase, as the correction phase, is where you see all these chart patterns forming. And what do you do at these phases, and where do you even have to trade or pick your trades as a trader? Within these three phases, where are you supposed to pick your trade? Is it the impulsive movement, the correction phase, or the continuation phase? Now, the best place to pick your trade is the correction phase. Okay, so after price has made a significant move to the upside or the downside, and it has made a retracement, that is where you as a trader, you position yourself at the correction phase and then you pick your trade. But how then do you pick your trade? In this video, I'm going to explain to you the very best place to pick your trade. Knowing this as a trader helps you to maximize your profit. Stick with me to the end of this video whilst I walk you through the three phases of the market structure, and then you are going to be blessed with the knowledge I'm going to give you. Let's go into the chart quickly.
Hello, welcome to my screen. In today's lesson, we are going to look at the three phases of the market. So the market actually moves in three phases. Let me write it here. Three phases of the market. So the first one is the market moves in an impulsive phase, okay, or impulsive movement. So the market gives us impulsive movements. Impulsive movement or phase. The next one is correction phase, and the third one is continuation phase. So let's look at some of the patterns at which this we are going to normally print today. The three. When we say impulsive, we want to see the market going, and when you get to understand this, an uptrend or a downtrend for you to let's know the direction at which the market will be going. So you see the market moving very sharp with just bullish candles, strong bullish candles in that regard. And then for that of the correction, you see you will see price retracing. Okay, price will retrace. That is where all the chart patterns forms. Okay, and then you have another continuation. So you see, this is how it mostly look like. You have an impulsive movement, a correction, and then a continuation. So whenever market move impulsively, mostly it doesn't move impulsively and then just return like this. It doesn't happen most of the time. Okay, what's supposed to happen is what I've drawn here. Whenever the markets move impulsively, people will begin to take profit, and then by so doing, the markets begin to lose momentum. And then also, a lot of institutions or a lot of people who want to jump into that trend will wait for this kind of retracement, and then they also jump in to the upside. Okay, in the near future, you will look at the levels at which price can retrace to before it goes to the upside. But for today, we are looking at the market creating an impulsive movement, a correction, and then a continuation. So an impulsive movement may also occur like this, where price will consolidate and then break to the upside. So when you get to understand this correctly, you get to know that whenever you have a consolidation phase, you can tell where price will be breaking to, okay, because you can already tell that once price has created an impulsive movement and then price is creating this sort of correction, the next thing going to happen is that price will break to the upside. In our previous video, we looked at the three trends of the market where we talked about bullish trend, bearish, or the market will either be consolidating or going sideways. So in this phase of consolidating, where you wouldn't know where market will be going to, in this particular topic, you will get to understand that even though price is consolidating, you as a trader, you can position yourself very well because you know where price will be breaking up to. So if you know that price will be breaking up to the upside, what you should be focused on is that you have to be looking at picking a trade at a support or buying from the support and not focusing so much on the resistance, because you know that price is going to break above the resistance. So whenever price comes to the support, you can have some confidence and then you buy the market. Okay, so this is how it actually happens. There are so many ways price can create this form of impulsive movement and then create a correction. Okay, so price can continue to create a correction like this in an upside movement, and then finally break to the upside. Okay, this is also a correction in a sideways. So this is that of the bullish one. Now let's look at that of the bearish one. It's also the same thing. Price makes an impulsive movement to the downside. It creates some sort of correction. That is where you get to identify some of the chart patterns like the rising channel, the rising wedge, and all those kind of patterns. Then you know price going to break to the downside. So once you know this, you can also position yourself at the resistance, and when price gets to the resistance, you can begin to look for some sells and ride more to the downside, because you know that with rising wedge or rising channel, the future of it is that price is going to break to the downside. Okay, so when price is creating something like this, you already know the direction at which it's supposed to break. Okay, you know the direction at which the market will be going. Great, so let's go into the chart quickly. This topic is a very simple thing to learn. So we go into the chart and then we identify the three phases of the market, and then we'll be done for this particular video. Okay, so let's look at this particular example. So you could see that the market was very, very bullish. The market was very bullish from this side. Let me even start from here. Okay, we saw this impulsive movement to the upside, and then what happened afterwards? We saw price, after the impulsive movement, we saw price consolidating within this range. Okay, price consolidated within this range, and then after it broke above it, it gave another impulsive movement. Okay, so whenever there is an impulsive movement, a correction, a continuation, the continuation also becomes an impulsive movement. Okay, so there was this impulsive movement again all the way to the upside, and then we saw price retracing to the downside, and this is the correction phase. This chart pattern you are seeing here like a wedge is the correction phase. So you can see that price broke above it, giving us another impulsive movement. And now look at the type of retest we had. Okay, we saw this correction phase coming as a retest to the broken structure that we had. Price came to retest it. So now let's look at it this way. You have an impulsive movement here, another correction, and then a continuation, where the continuation has also become another impulsive movement. Okay, so that is it. Let's look at more examples, and then you will get to understand better. This course or this particular topic is very simple. It's very simple. You can also look at it from this perspective. You have an impulsive movement to the upside. Okay, then we began to have this correction where price consolidated for a while in a range. Okay, see that price went to resistance, came to support, resistance, came to support, resistance, support, resistance. It was ranging like that. Okay, and then after the correction, price gave another impulsive movement to the upside. The same thing kept on happening. So the motive of this is that the motive of this video or this particular lesson is for you as a trader to be able to identify which phase the market is currently in, and then you also decide what to do. Okay, each phase has a story to tell, and then you must know what to do next. Now you know that whenever there is an impulsive movement, the market will have to breathe. Okay, thereby causing a correction to the initial movement it has caused. So once the market does that, it rebalances the trade. Okay, the market can't just be going to one direction like that. It has to balance a bit. It goes up, it comes down a bit before it keeps going. Yes. So that is that for impulsive correction and continuation. Okay, so let's take another pair and then we look at it. Okay, now let's look at this pair. Let me get a perfect example for you. Okay, so you can see that we had an impulsive movement to the upside from this direction. Then price consolidated all this way in a range market, and then afterwards price broke to the upside. So once you have had an impulsive movement, and then you are currently within the ranging market or price starts to consolidate, you know already that price will break to the upside. So in this case, you don't shiver so much in your trade, or you as well get to know that you as well as a trader, will also position yourself very well at the very best place to also catch up the next continuation move. I hope this lesson is very useful, and I hope you practice it and then you learn it the very best way like I've taught you. Always remember that after watching a video, you go back to the chat, go and do back testing and send screenshots for me to access and look at it. Make sure you don't just leave this channel. Subscribe to this channel, put a thumbs up to this video, like this video. If you have any comments, you can freely leave. If you have any comments, you can freely leave your comment below, and then I'll get to your response. Better still, you can also reach out to me in DM and then ask me any question you want to ask. See you in the next class.